Right, how this obviously works for anyone in here who's new, I'll go through everything, which obviously I've got. I've got a few, notes here about why we're going to focus on yields and oil. Um, I've got some interesting, stock news about energy. And yeah, what obviously we want to be, looking at here. So I think one of the biggest things, and we'll go over this briefly because it doesn't really matter too much. But obviously, Iran have come back with 14 points that obviously the US need to agree, and Trump's, said that he's not going to agree this, which obviously, no one ever agrees the first price, so it's going to be backwards and forwards. But yeah, so obviously tensions and escalate is it is always about until this is over, escalation and de-escalation. Now I'm going to show you two things that you can, monitor to obviously, see what's obviously how to obviously identify how markets are looking at it. Now, one thing to be aware of is de-escalation is going to trigger a lot harder than escalation. So markets obviously are volatile, they are tricky. But obviously I think we've been navigating pretty well. This was obviously us from last week. Um, Obviously had a good day in the end on Friday, and then yeah, Thursday, Wednesday, Tuesday, Monday. So nice, proper, profitable week in the end. So very, very happy. Looking to keep April, May green. April we had a few more, losing days, although they were small. Had obviously three losing days, one obviously non-trading day, but obviously still very, very happy here. I think that was about a 10% month for me in the end, about 11% potentially. So yeah, pretty happy. Um, right, let's go through everything here. So first things first, what I like to do on a Sunday, all right, is I like to just obviously have a look at what news is coming up. So like I always, say, don't put too much pressure on yourself. Kind of treat macros as a bit of a 3 to 6 month project. Remember, generally the same things happen month on month. So, once you start to get used to it, start to monitor the markets, you're going to understand, how kind of macros work and what potentially might happen. So tomorrow, starting off, we've only got a bank holiday in Japan and the UK. There is not a bank holiday anywhere else, so we will be trading as normal tomorrow. Expect London to be a little bit slower. Might potentially not because obviously it's market open, but and then obviously, it's going to hot up in the afternoon. So we'll obviously have a little look in the morning. I will be waking up early, but obviously then I'll be, you know, probably putting all the cards out for the US Open at 1:30. Nothing really coming out tomorrow in regards to news. Tuesday, we've got obviously interest rate decision. This is interesting, all right, because Australia are due to increase interest rates 0.25%. They are the first ones to do this. So it will be quite interesting to, see how kind of markets react here. And obviously that's why they did hold up on Friday. If you look at obviously, for example, Euro USD tumbled, GBP USD tumbled, but then Aussie kind of stayed where it was. So I do think if we got a slightly weaker dollar in the morning, we could see this, especially potentially Tuesday, Wednesday start to pump to the upside. So. Let's now go back on. And then Tuesday, not a lot else. We've obviously got some jobs data, import export, PMIs, but a little bit later in the afternoon, all expected to be pretty much equal. PMI is supposed to come out a little bit below, but I think all this will be priced in. Wednesday, we've got again UK PMI expected to come out as it is, and then obviously we've got some employment change. Thursday, more jobs. It's lots of jobs data this week for the US, and then we've obviously got non-farm payroll also. So that'll be quite interesting to obviously see. Mainly what I'm interested in is the unemployment rate. If this stays where it is, I don't think jobs really matter. They don't have if you look at this, markets are pricing in quite a big reduction here. So Friday could be a bit crazy, but let's wait and see. Obviously, what happens here. But that's obviously what we're looking at as an overall here. Now, one thing that obviously markets are a bit confused about is energy. All right. So especially renewable energy, stocks for anyone who is in, into, stocks, renewable energy is due or is tipped to start to pump, all right? Because, if this is this obviously war, and obviously as long as Hormuz is closed, then there's 20% less oil being distributed. So what's that going to do? That's going to put it in the hands of all the energy companies or renewable energy companies. It's going to become more popular because obviously worry starts to kick in. All right, just like, for example, if I've obviously spoke to a few of my friends in Dubai and before obviously the peace agreement, they all had, like a month's worth of water, month's worth of rice, everything was, they were storing it up, ready. So obviously there would have been a lack of water, etc. So I think the longer this goes on, I think looking at prices, looking at articles, I do think, for anyone who wants a bit of a stock tip, I do think that renewable energy companies are going to start to come into play. Watch their stocks, start to creep up. Even companies like Tesla, we're going to be watching them, because obviously they're big on renewables. Watch them start to rise again. So it'd be very, very interesting to, yeah, see what happens here. And so let's obviously have a quick look at where the dollar is. It's not at the best place. I kind of think, I mean, we tipped this to happen on Friday. It did move a bit lower than we expected, but obviously we got it right. So I would have preferred price to be in a different place, but I don't like where price is on market open. All right, I just think it's in, yeah, a bit of kind of no man's land here. We've obviously had these lows hit, tested, couldn't break. We've also had this area hit as well. You can see here since the 8th of April, we haven't been able to break through it. All right. So kind of trapped. This is our consolidation, range here. So I'm interested to obviously see how markets kind of react. We've also got a bit of, a sticky area here, so where price is right now, so we're kind of trapped between obviously all these. We've then got two key levels in between. So I don't really like where price is, trend. We've obviously broken trend, so it's technically trending to the downside. You might see obviously a rise up and then a continuation. Now, one of the reasons why we took trades the opposite direction on Friday, price was down here at 130 around these prices here. I didn't think there was enough obviously, news speculation to obviously push price any lower. So I was expecting more kind of sell-offs where we got caught. I think it was Tuesday or when, no, it was Thursday, where, profits were to take in. I was expecting that, similar situation. Obviously, that's what happened because there's not enough news to push, obviously, dollar to the downside. I think to break above either of these, this top half here is escalation and this will be de-escalation here. So expect, one of these to be tested. It could be this week, it could be next week, it could be, any time. But within the meantime, this is our range here, and obviously you've always got to, kind of mark everything out and give reasons why, So yeah, I'm kind of looking at the more consolidation vibe of trading as opposed to trend at the moment. So I'll keep you guys updated on that one. Now, two charts, which, and obviously you guys know probably before January, lots of you probably didn't even know what the US 10-year yields chart was. Some of you still might not, but obviously yields and oil can can tell you a massive um, bit of information about where the dollar is potentially heading. All right, so if we're looking at oil right now, you could even argue something like this. That's what we're kind of looking at right now. All right. And it is an uptrend, it doesn't matter how you kind of look at it. Yes, you could argue that the more that we're kind of trading it, the more, it's kind of consolidating at this price. All right. There'll be, I do think oil is going to struggle to break 80 for a long, long, long time. So I do think companies are going to be looking to buy. But obviously, again, you can utilize oil and yields to obviously, you utilize where the big money is, flowing. So obviously, if there's any kind of escalation, yields are going to rise, oil is going to rise, and dollar is going to rise. All right, and it's going to bring the, stock market the other way, gold the other way, because obviously yields are rising. All right, same thing in regards to the other way round. If there's de-escalation, that's going to drop yields. It's going to slightly drop the dollar, but not completely, and it's going to dump oil. So. But I think oil's going to hold above 80 until obviously, something major happens, to obviously sort this out. But we've still got a term of recovery that we need to be aware of. All right. But obviously, utilizing these charts will obviously help you, to understand, where escalation is, where, money's, flowing, kind of give you a bit of a personality profile of where money is heading. So yeah, that's obviously two charts which you should be using, very, very well. One thing that I'd like to point out, all right, is that if we look at the dollar, all right, it's absolutely tanked. It's equaling, lows of like the 17th of April. Yields, if you look at the 17th of April, it was down here. Yeah. All right. So yields hasn't dropped. And how do we use yields is the big money coming into the market. All right. So, if the dollar is at equal price, but yields is miles off, all right, still it's absolutely miles off. So that to me means that there's big money still being put into the the US bond market, which should in turn catch up the US dollar. All right. Now, one thing that obviously I tell everyone to do is to try and work out where you want price to be. All right. So just like I've told you, there'll be lots of guys looking to buy oil from here. All right. And what does that do? That's the difference between obviously retail and institution. You're planning where you want to enter. Yeah. Right. Whereas I think lots of retail will switch on a chart at a particular time, look at a candle and then think, you know what, I'm going to buy from here. All right. Whereas obviously institutions will be doing it the opposite way. They're pre-planning. All right. They're giving themselves more reasons to enter a trade. Now, I think if you can start to do that, it's going to help you. It doesn't matter how you trade, but it's about pre-planning and wanting price to come into your area as opposed to finding reasons to take it. All right. And obviously, like we'd see, we do it every day. We have trades trigger 9 times out of 10, price will come into our area. So that's obviously, something to, to obviously be aware of. So yeah, what I mean by that, where do I want the dollar to be in the morning? I would quite like to buy it, and I'd like to buy it anywhere from here. All right, so I don't trade Sunday evenings. I'd love dollar to come back in here for London Open, and then we potentially buy from here. That would be my ideal scenario. Um, but because we obviously had this momentum Friday, hopefully we're going to come back and retest this area, and then obviously we can capitalize from here. That's what we are looking at here. Let's just go through a few pairs. Pound, if we look at this, it's trading. Broke obviously these highs here, but now we've broken back below. You can see how choppy price is, right? And don't beat yourself up because price is, trading's hard. Especially at the moment. 'Cause you could see here struggling. We broke through, finally broke through. Everyone to be starting to buy from here. All right, and then what happens? It just dumps off. All right, so that's more understanding, markets more than anything. I actually think euro could potentially, if we get a strong dollar, I actually think this area here will be tested, because euro out of everyone is pretty weak. Aussie's the only one that I probably will end up staying away from if dollar stays strong, because I think that because of them raising interest rates, I think potentially that's going to obviously hold Aussie up, and yeah, we're going to continue to see this price here just consolidating from side to side. Everyone always asks, where's gold going? You know, to be honest, right now, no one really, knows what's happening. We've got like a short intraday uh, trend, which is, kind of trending to the upside, but obviously that is, short term. Where would I want to be buying or, selling gold from? I'd be wanting to look at it. I mean, if you look at this price, it looks a little bit, I guess, like an inverse head and shoulders. If you get a weaker dollar, we could come and test into these areas here. But obviously, yeah, I think it's going to take a lot for it to break above here. We're obviously just trading below EMAs, although trend is pumping to the upside. I reckon if we look at this on a slightly higher time frame, if we go on like a 4 hour, trend is going to the downside there. You can see here. And I always like to sometimes draw the line chart because, you can really, really, kind of see trend a bit more clearly. So if we go on the 8 hour, can see here trend is definitely trending to the downside here. The daily, you can't say that's an uptrend. It's clearly trending to the downside. So sometimes the line chart helps you. What the line chart is also good for, if you struggle to mark your levels up, use this because it's just a lot easier. All right, you can really kind of gauge, where price has been kind of, struggling. So you might be doing something like this. You might be doing this on the end of this one here. You can see here price has reacted. You might want to try and drop this one potentially down a little bit. So it's just about on top. Let's just drop you a little bit down. There we go. Something like this. You might want to put another one here. And I reckon if we switch this over to candles, and then you can see as we come down, price reacts off everything, broke through, roughly retested this area, comes back up, retest this one here, comes back down, pushes up. As soon as it breaks through, continues down to this one here, rebounds. Where does it tap? This one here. All right, so utilize the line chart. It's on this button here, and it'll help you to obviously mark up areas because all that's all key levels are. It's areas of interest, So as we've got these here, we might be now arguing that what, we're interested in price here, and we're also interested in price here. Yeah. All right. So those might be your kind of two areas. So that's not a bad one. Yen, I've been staying away from here. Had this big drop on Thursday, and now we're kind of consolidating here. If we look at this on a daily, it's a little bit messy. I've had one day here engulf all of this price action. So yeah, that to me means what, we've got to kind of stay away, and you can see here from all the big price moves, they're all to the downside here. Yeah, all of them are. All right. There's no massive green candles here, so you do have to be aware. So yeah, that's obviously about it from the whole recap from me. But make sure you obviously utilize oil and yields to obviously find out how money is judging escalation or de-escalation. Does anyone have any questions? Does anyone have any questions? I did have one question. Let me have a look. I had a question from, let's have a look. Tom, when you get the chance, please let me know how to attend the boot camp. Okay, I'll respond to him. Magnus, new member. Trying to find the question. I didn't have very many questions at all, actually, but I will, leave those. So does anyone have any questions? Any questions at all? Happy to answer. Um, happy to answer. No? Remember, we've obviously all got to have, obviously realistic expectations. Remember, markets are hard, so don't obviously expect to take a certain amount of money out of the markets every day. Just potentially, lower expectation at the moment, build up a bit of confidence because we don't want to be caught out. So now is not a time to risk. I know that there's a lot of hype being drawn into the markets, but obviously now is not a time to risk heavy. It's a time to obviously, take what we can and then, build on it. So yeah, well, if there's no more questions, have a great evening. I'll be back at 6:30 in the morning. If you don't follow my YouTube, follow it. Like it, comment, subscribe, whatever. Do it all. Right. Have a great evening, everyone, and let's smash it. Let's absolutely smash it. Have a good one.